Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Good morning, everyone. Today's Tuesday, September the 2nd, and this is the Moneyball Morning Report for the Benzinga Pro platform. Today, let's see what we've got here. We've got PMI at 9:45 Eastern, ISM at 10 a.m., and construction spending at 10 a.m. I did a lot of driving over the last 3 days, and there is a lot of construction in this neck of the woods. It'll be very interesting to see how it compares in general here. But these numbers are potentially market moving, so you want to watch that 9:45. As a quick reminder, remember, in the early part of the morning, we do have a tendency to see volume spikes between 9:12 and 9:20 as big money begins to position for the day. So let's begin with the ES, the E-mini S&P. You might say, wow, that's kind of a wide angle, but look at where we are. When we begin to fall and we go through all of these volume events that we start seeing, we have to zoom out into the space where we expect to see other volume. And so right now, what we are looking at is a space where the traders are going to try and hold the zone here at around 6,412, right? First pass, what's it measure though? Big volume candle from August the 22nd. Remember, all we do for the volume markers that we can see from down here, it gives us the roadmap of where the big money has positioned over time in the last several days. If you take a look at the sidekick note that I gave you from TrendSpider, it said, hey, listen, Friday we had a pretty big distribution event into the close of the day, and we really had an hour of significant selling as the market opened. The largest volume candlestick of the day at 3:30 Eastern gave us this measure with a high of, what's the high of that candlestick? 6,476. That became the line in the sand for the traders trying to get back up above all of this selling pressure. They could not do it. They tried during Monday's motion, but notice how thin Monday's volume was because U.S. markets were closed. So that failure, take a look at this. We had the opening candle at 6 o'clock Eastern last night. We opened above it, closed at the edge of it, and then immediately failed. So this failure event tells us that the short triggers at 6,476, and then we walk down the others. First target 6,457, and then a continuation event. As far as the gamma walls and the gamma lines from Mentor Q show, we've broken the put support for intraday motion. And this means that the traders who are short here, short the puts, that's a bullish position, they're going to have to use the equity itself, the instrument, to shift their overall delta so they can stay the short puts but also be short the actual instrument, and that is pushing us down into this area at 64.14. That's a big zone. That is all the way from August 22nd, and this is the Fed speech from Jackson Hole. And here we are after 1, 2, 3, 4, 5, 6, 7, 8 days later, we have retraced this entire formation. This is a great area to collapse into the 1 minute. Watch for price action to fade, bounce, and then give you a higher low, and that's going to move up. As I mentioned last week when we were talking about this, I said, hey, listen, it's my suspicion that we fill in this low volume node, and that is exactly what we are doing. So what are the traders going to do? Well, this is a pretty big volume candle, a lot of institutional pressure here, but probably because they were flat-footed. Any bounces are likely to give us sell zones. So what is the ideal sell spot for today? In my mind, this selling at 4 a.m., 3:30, excuse me, just before London opens. that area of 6,430. That's outsized volume, but we've had outsized volume all the way across, right? Pretty important to note. So the bounces into 6,430 likely to give us another sell zone. Ideally, it's going to be at the top of the low volume pocket at 6,440. If the traders cannot hold this, folks, we go into the next high volume zone. Again, the roadmap is already there. The next highest candlestick is the 30-minute opening candlestick from August 21st, and that's 63.97. All right, that's the next line in the sand. Easily, it could fade into that area. We are in distribution at this space, so if you're looking for a long, you have got to give it time to let the short traders exhaust themselves, or they're going to run into this high volume pocket right over here, and that's all the way down at 63.83. I expect deep dips to have sharp reflexive bounces. Yes, it's September, but there are a lot of people on the short side of the boat, and so the dips are going to be very active short zones for the traders trying to step on the necks of people trying to buy. The dips, remember what institutional motion loves to do. They love to trap shorts down into these areas, turn around, and then make big reflexive motions to the upside. Be careful trying to pick bottoms when this kind of pressure is showing. Let's go to the NQ. All right, so same box, right? Only they've broken it. So let's take a look first at how the NQ traders behaved at the edge of this box from August the 22nd. They tried to buy it right here. Push up over the put zone. That's where the sellers of the puts can go, okay, we can breathe easy. Collapses again, the failed retest of that level at 23,267 brings prices lower. I see a lot of weakness in the NQ, a lot of weakness. So where's the next candlestick of import? Here it is, right down here. And that line, I'm just going to draw a line, is where they're battling right now, 23,175, with the high of that candlestick near the put wall, and that is 23,290. Cutting through it quite dramatically. Remember, institutional motion is going to force sellers into the game, and then they're just going to turn around and rip their heads off. That's just what happens. Okay, so we are underneath this ledge, but they could hold it. We want to watch for that. When we recover above this level at 23,175, the traders are going to try and walk through this noise, right? It's clearly old resistance, new support, but it's not backed by any volume. Nevertheless, they're going to try and move it up there. They fell right through this low volume node. They did not build on it whatsoever. My suspicion is they're going to try and build on it later, but at this juncture, it is a fade that moves us even further to the south. All right, so let's take a look at the next candle of specific import. It is the 9:30 candle of August the 20th. We're simply walking this down. So as soon as we get the trigger to go short in the overnight, what we end up doing is just following the stair steps. Imagine ourselves with a lamp, one of the old-timey lamps, something we might see from Raiders of the Lost Ark or whatever, and we're walking down a dark staircase. These tell us where the steps are. These tell us where the steps are. It tells us when we can hold on to a short, and now all we have to do is build the self-control to follow along. Listen, and all we have to do is build the self-control to follow along. I've got that in quotations because that is incredibly difficult, friends. It's tough to do that. That's the part of mental control and specific development in your mind of doing what the charts are telling you to do and having confidence that you are doing the right thing. Okay? So next, that's the next line in the sand, 23,146. The next highest candlestick is actually right beside it. It's right beside it at the 10 o'clock candle. And so I suspect that this candle is also important. For people that measure initial balance, where they go from 9:30 to 10:30, they're going to be watching the edge of that candlestick formation. And that takes us all the way down to 23,063. We are in distribution, okay? We are in distribution. This is what happens. We accumulate. Uh-oh. First pass, all right, let's take it back up. Second pass, third pass, fourth pass, collapse. All of these things can give us trouble when we're trading, especially if we think, oh my gosh, that is a failure. But as long as you fade the bounce, you're going to be able to manage the risk, okay? I suspect the traders are going to try and hold this particular edge here at 23,175. A lot of momentum that's negative. So this tells you, hey, if I try to take a long here, because momentum is so steep and the moving average is so steep, what I am going to see is a bounce that fades. And as long as it holds the floor, I can keep buying that bounce. And then this momentum will shift. See how the bounce, buy the bounce, buy the bounce, you take it into resistance. You buy the bounce again, take it into resistance. You buy the bounce again. All of that shifts momentum into positive areas. And then we're sitting above. Now, the only two moving averages I have sitting up here right now are the 63 and the 200. I just didn't feel like putting the 14 on today. For some reason, it was annoying me. So that's it. Now, let me expand this indicator list because I am going to hide the Mentor Q lines for the YM. All right, here we go. This is the 22nd, again, right? We know where this line is. Right here, we're in the box, but we're not below. What does this tell you? The YM is holding up where the ES and the NQ are not. It's not even through this ledge. There's so much media saying, hey, people are not buying U.S. equities. I'm going to tell you, international people, they're buying U.S. equities. This is the first place they go. Now, is it strong? No, I don't think it's strong at all. Notice where it begins to collapse, top of the edge of that big volume candlestick. Once it starts breaking down there, notice they're going to try and do this. Why? Moving averages. Moving averages are up. They're telling us, hey, listen, buy the dip, buy the dip. Here's the 200. They're going to try and buy the dip. Notice this candlestick formation. That is the last 30 minutes of the trading day. That's the anomaly. So I've got my box around there, but I do have a tendency to draw boxes at the first 30 minutes of the day and the last 30 minutes of the day, only because I want to see what relative strength looks like. But you can see them. They are trying to hold these edges. Broken down off of the zone. They tried to hold 45,447. They've lost it. Where are they headed to? I think they're going to 45,199. Look, this is very heavy congestion. You expect big money to flush and bring in the shorts, where the shorts go, ooh, I lost the line, I'm going short, and bring them all the way down and then trap them and turn around and come right back up. Where is that? That is the first candlestick formation, and that looks like the top is 45,244. The bottom is 45,075. Two candlesticks directly in motion with each other. I think they are of import, particularly as we look to the left. You're going to see that there's a fair bit of old resistance right there that becomes support. Okay? So, that being said, if per happenstance we have ourselves a watershed day, the next day after that is all the way down here. Look at that. That is 44,830. Big wick down, 44,624. This is trapping shorts and then having a reflexive move to the north. All right? This is what trapping shorts looked like. Oh my gosh, look at that. Failed support, failed support. Look below and fail. Boom. They pile in and then get their faces ripped right off in the next candlestick. All right? That's what we want to prepare for. Super important for us to realize that the YM is still holding up, but it's probably going to have the same type of pattern that the rest of the indices have. And notice what happens here. See the double bottoming formation? We expect this to show up over here. We do. If it doesn't, we've got cascades lower. So watch for this. So far, we had the bounce here in the pre-market near Europe's open, the dip lower. Now we're going to see the press up after the fact. And then if they hold that ledge, then it's upside pressure to recover some of what they've lost. All right, micro Bitcoin. Let's go here. All right. So here we are. As I mentioned a dozen times, is this the Q contract? This is still the Q contract, isn't it? Man, I dreamed about what? All right, let's just use this one. I dreamed about charts all night long. I mean, all night long. It was crazy. Okay, so what are we staring down? Two high volume candlesticks almost equal in length, right? So we have to draw both of those. Right, we have one here, and then we have one right where we're battling, both of these. And the date on this is the 29th, right? Both of these candle formations. Right. You know what I love about explaining this is that there's very little gray area, right? I mean, of course, it's always a shade of gray, but it sure is nice to see where the steps are, right? Rather than putting your foot out in the dark going, oh, I wonder if this step holds, right? So at least you'll be able to manage your risk really well. Here's what's happening. Traders are trying to hold the floor. We've had a low, a higher low, and now another higher low. We're trapped between two moving averages. The front line here of 111,225 is a ceiling. The VWAP is above at 112,000, and then the point of control is 112,450. So someone said, hey, what am I actually doing with this volume profile? Well, you want to see where value area high is. You want to see where value area low is. You want to see where the point of control is. And you want to see the VWAP. Now, unfortunately, TopStepX does not give us the relative VWAP, but it does give us the point of control, and that is something certainly that we need to focus on. All right? So we'll talk a little bit more about putting those pieces together over time, but this is what we're staring down. Higher highs, higher lows. Could this be a flag pattern that takes us right back up into heavy congestion? Why, yes, it could. So where is the ideal short here? I don't really like the short until it loses 113,000. Yes, you could short here at 111,200, but the moment it gets above 111,500, you got to get out of Dodge, right? This is very noisy, and I think it's got further to the south to go bottom edge 108,750. It's already tested that. Right now it's trying to hold it, so they are trying to recover off the base, but the big picture shows low, lower low, lower low, and high, lower high, lower high, and that means more downside pressure. And we have to look really far to the left to pick up what those edges are, probably another contract to stare that down. We'd have to look at a daily chart to help us see what's going on here. All right. Next, let's look at oil. I mean, wow. Is that right? Let me make sure that we're sitting on the right side of the fence here. Yes, we are. Okay. So there's a lot going on here. A lot. Geopolitically. However, it doesn't really matter what's happened geopolitically. you just want to know where the price action is sitting. We have to go to the 4-hour chart in order to see that, because this thing has been in a peat bog since, oh my goodness, since June, right? Look at the form: high, lower high, potential other lower high, low, lower low. So it's got drift that's negative. That being said, what they're trying to do is lift the floor. And so they always being the collective traders holding the most strength. So that's the floor they're trying to lift. And so we can see that there's a natural move up into the call resistance, and that call wall is providing us the current short, right? So short at 62, that's where we're seeing that. Excuse me, 66. Good grief. It's like my brain is not seeing any of the actual numbers. It's just calling them out of my head. It's not good. Okay, so let's go to the 30-minute formation. We can see all kinds of noise here, lots of sideways patterns, right? We know 66 is the ceiling. The high volume this morning puts us in this box, right? And that's pretty high volume for this time of day. It truly is. That, again, we must have had, I've got to go look at the news. We've got some kind of European news. I'm not sure what it is, but it's definitely news. So where do you think it's going? Bottom of this box, 65.31, right? Why? Because the traders tried to move above it. They couldn't. Now they're going to dance maybe at the halfway spot, or they're going to go directly to the bottom. That's what happens, right? Trend is very strong. Trend is very strong. So they are going to find buyers somewhere around here. They absolutely are. They're going to try and find buyers somewhere around. Are they going to try and front run this low? Possibly at 65.32. But if they don't, we're going to head back into Friday's motion. No, yesterday's motion. Monday's motion. That's very interesting. And that puts us with the high at, let me use this one, $64.81, right? If they lose that, they're going to come down into this noise right around here, right? And we've got some volume, big volume candlesticks sitting around this zone at the top of the region. So it easily could come to that area at the top of this box over here, right? But it's, I mean, look at it. You know where they're going to try to go, right? And you can use small time frames or whatever you want to help you walk that down. But the key point is understanding prior to the event what's likely to happen and then acting on it. That way you're not buying a reversal. Oh, gee, there it goes. I buy the dip. No, you're looking for the framework that says, hey, I'm going to collapse into this zone, right? And then when you see it lifting, you can go, oh, all right, well, I need to take some of my profit off. Design of the trade comes from active forethought of what could happen, what's likely to happen based on volume, and then following along, not trying to pick bottoms. Okay, here we go, gold. Last night, I said, hey, gold's in a breakout formation. It's going to bounce. Someone else in the chat was saying, hey, I think it's a short. Turns out both of us were right. I got my trade to the upside, went straight to profit, right? And then it rotated over and faded. Here's the thing about gold. You see this trend? It's up. So they're going to try and buy these dips. Now, is this a likely place of volume exhaustion? I have to say it could very well be. So you want to be very careful about buying any kind of breakout formation at this stage. My trade closed at this exhaustion candle. Why is this an exhaustion candle? Extremely high relative volume. That's why it's that color. And then now we've got a failed retest of that region around $3,561. That failed retest opens up a short, but you are battling against a very strong moving average and heavy congestion or inventory accumulation right around these zones. So the question then is, can I find a candlestick of relative high volume that tells me where these support and resistance lines really are instead of heavy congestion? And I have it right here, with the low being $3,520 and the high being $3,544. So losing this $3,544 event is going to give us an opportunity that says, hey, either it bounces and I get to take another long, or I lose it and I'm off to fill the low volume pocket that's down at $3,520. All right? Just look for the real road signs. Don't get caught up staring at the guy spinning the arrow at, asking you if you want to get a car wash or get your dog some treats, right? It's about focusing on what's really going on in the market. And the only thing that allows us to do that is by watching what big traders are doing. Take a look. SPY, bottom of the box from Jackson Hole. What are they going to try and do? They're going to try and buy the bottom of that box, right? Are they going to fail? Are they going to succeed? I don't know. Momentum says you better not go out there and put a limit order long in, right? That's the purpose of momentum that you can see with a MACD, right? The volume profile tells you, hey, I am well outside value area low. I am well outside value area high, but I am coming to a critical mass event where a lot of traders bought the market. And so what are they going to do? As I've said 1,000 times, simpletons are traders. We are simpletons. And we're going to look for, where's the last time that happened, right? And we have machines that will say, hey, go find the last time that happened. And then they'll start either trying to flush and bring in more shorts and then recapture, but that is going to be your line in the sand here in SPY. If it holds $638, it's going to try and get its way up to the value area low, which is 640, and then try to get to the put wall, which is 642. They want this put wall, or we are going to cascade. And if we cascade, folks, 635 is going to be the next line in the sand for us in the SPY. All right? Take care, everybody. I'll see you on the streams.